Alrighty, what's going on, guys? Edward here, back with another video. This time I want to talk about inducement, and I actually wanted to show you first before I do this video, because I have a couple of videos based on inducement, but you guys want to see, you guys wanted to see a little bit more. So when you go on videos, right, on my YouTube channel, if you want to filter right here, just go here on the magnifying glass and just type in inducement. Right, hit enter, and you see that actually I have a couple of videos based on inducement. You can find a couple of scenarios, even a couple of trades I took based on that. So go ahead and watch them. Not just that, I do have actually a playlist, which I'm going to leave you on the top of the screen right here. I'm going to leave you the link of the playlist based on smart money concept. It's literally a free course that you can see, that you can take there. All right. Now, inducement is, I'm going to show you a couple of things that what it means and how inducement happens on the market, why it happens, and what causes that. So basically, inducement, the meaning of inducement, of the actual word, is the act of persuading someone to do something. All right, let me just put that clearly there. Inducement is basically persuasion, right? You are persuading someone to do something. Like what? Like buying or selling, right? Just entering into the markets. Just the market will show you something, right? The price will show you something that is going to make you want to get in. So that's why it's called inducement. It's inducing you to do something. It's inducing you to get into the market, whatever direction you want to go. You want to go buying, you want to go selling. All right. That's literally what inducement means. Okay. The actual word and what it technically means. All right. Where do we find inducement, and why does this happen? It happens all the time, all right? It's basically sort of manipulation, right? Market makers will do this all the time, right? To induce buyers or sellers to enter on the markets and eventually becoming liquidity. Okay, inducement is it's a sort of liquidity. Let's call it like that. Um, because without inducement, there's maybe no liquidity, to be honest. So, just an example. Just right here on this downtrend right here, we can see market is actually moving to the downside, right? We see a little impulse, correction here, price pushes up, and then it starts dropping back again. Look what the market did, which is, this will lead to a lot of things, which I'm going to show you right now. This break, we actually had a break right here. We had another break right here, right? And we had another break right here. Let's try to show the ones that are going to the downside. So right here, I would not say I would not call this a boss or break of a structure, even though it is breaking this previous low, right? So technically it is a break of a structure, it's breaking this low, but it's not a confirmed break of a structure. I do explain that, and I do talk about that. What is a confirmed break of a structure? What is not? A lot. So please watch my entire playlist there so you will understand, right, what I mean at the moment. So because the market just literally had an impulse, minor correction, and another impulse right away, is not taking any liquidity right here. You don't see the market actually liquidating anything. The market just simply did one move, two move, three moves, right? So this is also known as inducement. You can call this actually inducement. Okay, the market is just simply inducing people to go selling. Now look at what happens after the inducement. It's inducing you to go selling because it's breaking a structure. Okay, if you are a retail trader, right, most likely you draw a support in there, right? By the time the prices stop right there, you maybe are looking for a buy. Once it gets here, you're most likely looking for a buy, or maybe looking for a sell if it breaks, right? So this whole support, apparent support, it's actually known as an inducement area. You can call it an inducement area. Why? Because right here, once the market gets right here, market makers know that this zone, it will induce a lot of people to do something. What are they going to be doing? They're going to be either looking for a buy or looking for a sell if it breaks. As simple as that. Okay. So that's an inducement zone. Okay. So what are retail traders doing? Retail traders are seeing the break. They're most likely enter. They're aggressive traders. They're conservative traders. There are a lot of type of traders, right? So they're most likely some aggressive traders entering right there when they saw the break right here of that previous low. So what the market is doing is inducing sellers to jump in. They're maybe placing their stop loss here or maybe even here, right? Above the previous high, which is normally what they do, right? So let's say they enter right here aggressive, they place the stop loss above this high, right? And their take profit, let's say they're going for a 1 to 2, 1 to 3, whatever the situation is, right? Now, market is, I call this inducement, as I mentioned, because it's not taking any liquidity yet. This is not a confirmed break of a structure. It's just a little inducement. The market is inducing sellers to then wipe them out. How they're going to wipe them out? Look at this. Price then comes back up to their entry point, maybe hitting their stop loss on break even or so, right? Maybe scaring people out, to close their position. And then if not, if you're actually holding and you're still holding for the TP to be hit, what the market is going to do, go up. Now it's going to stop you out, right? Sweeping you out, which is AKA another inducement. This is also known as another inducement, right? Because not just is stopping you out from this trade, from this sale, but it's also now inducing buyers to jump in after they see the break of this high. You see, so inducement is happening everywhere right now. So the price broke right there and literally is inducing buyers to get in. So what they're going to do, an aggressive buyer will most likely break as soon as they see a body of the candle closing above this high, right? So what's going to happen? They may be placing the stop loss below, right? They're most likely drawing a support right there, a resistance, right? They have a zone like that. So they enter there, they place the stop loss maybe there, or those who think no, you know what? I'm going to put it actually below this low, right? That's what they do, and they take profit. Okay, somewhere there. Guess what? Market is after that inducement, right? Which is persuading buyers to go right from here to here. The market is just inducing buyers. Boom, triggering entries, right? Liquidity, a lot of money being placed at this point, and now market makers will bring it down. Now stopping them out. Boom, right? So you see, it's taking liquidity, and this is, as I mentioned, what I believe. There is no liquidity without an inducement. Okay, the inducement has to happen. The inducement happens all the time. The markets will induce traders to do something. It will induce them to go and make a position to just simply buy or sell, whatever the situation is, right? So I hope it makes sense. I hope I'm not confusing you right here, but this is basically what inducement is. Okay, it does happen all the time. It has to happen because the market makers. That's how they make money. This is how the markets move hundreds, thousands, billions, trillions of dollars every single day, right? So what do we do in this case now that we know where is an inducement, right? The market induced right here. There was no liquidity taken to the upside in this case. In this move, right? This move, there was no liquidity. I would call this inducement. Then price, what the market does, comes back up, takes liquidity, right? Sweeps these guys out, right? I also call this inducement again, right? It's another trap, right? And now price breaks to the downside. After this inducement, when the market is taking liquidity, if it's on a downtrend, the market is taking the first lower high right there, the closest lower high right there, right? And it breaks now to the downside. Now this makes this my confirmed break of a structure. Okay. Now after that, what happens? After that break, market actually another little correction and then breaks again. What is this? Is this a boss or is it an inducement again? This is just another simple inducement. Okay. Right. Eventually the market will try to sweep this high eventually. All right. And if it does this now, what do we have? We have now a break of the structure, confirmed break of the structure. Why? Because the market now induced at least the closest lower high. If we're still on a downtrend, the market now is taking that liquidity, right, from the first inducement, inducing sellers to jump in right here, right? The market is actually going up, sweeping them out, right? Sometimes the market can even go higher and even sweep these highs, look for those highs, or maybe, as order block, you smart money concept, you have your positions right there. You have a POI, maybe right there. That's where the market is going to go to mitigate after taking the liquidity, right? This inducement right there is AKA liquidity, basically. So let's say you have your liquidity right there or inducement. All right, market is touching the POI and then breaks to the downside, and this is my confirmed boss. Okay, very important, because that way I know where the confirmed lower low, lower high. My confirmed lower low is this one. Confirmed lower high is this one. Confirmed lower low is this one. Confirmed lower high is this one, and so on. Okay, this is not a lower low. This is not a low. I mean, technically it is. This low is lower than this one, of course, but it's not a confirmed lower low. It becomes a confirmed lower low once the market induces first. Okay, that way we know that we have external structure, lower low, lower high, lower low, lower high, lower low, right? And so on. So the blue line is the external structure, and all the little noise that you're seeing right here, this moves right here, this is internally, right? Market is just moving, the order flow right here is just moving internally, right? All this noise right there, boom, internally. All right, I hope it makes sense. I hope I'm not confusing you, as I mentioned, but it's very important to understand inducement, what the word means, how it happens, when it happens, why it happens. All right. So let's actually go into the charts. This example, it's basically the same thing. When it comes to bullish, I see a little inducement right here. I see an actual boss right there and another inducement here. How do I know? Because market is this one, this minor correction right there. The market did not take any liquidity. So this is my first inducement. On this move, after creating this high, price goes down, sweeps the closest higher low, and then breaks to the upside. So this is my confirmed boss. This is an inducement or a sweep, liquidity grab. They have many names as well. And this is another inducement here. Okay. So that way, guys, this is how we normally mark up the structure, and this is when we know the inducement and the reason why it happens. And at this point you should know that it happens all the time. It has to happen. That's how market moves. So let me see if I can actually just show you some examples. Let's go back actually in the past. Any time frame, doesn't matter the time frame, any time frame. Right? So look at this. For example, right here, without going too far, we have a move. Let's say you want to mark up this zone, this high. What would you call this? Is this a boss? Is this an inducement? What would that be? That to me would be an inducement. Look at what happened. This is an aggressive buy, very strong aggressive buy. All candles white, right? All candles white. The push started pretty much from here. You see, the market did pull back a little bit, boom, 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 right? Created this low and then broke. But did it take any liquidity from a closest higher low? No. Like the closest maybe was there, and then the next one maybe there, right? But it did not take any liquidity, so that makes this not a boss. This is not a confirmed break of a structure, right? Other than just an inducement. It's inducing buyers, right? Inducing buyers to get in. So in this move now, what do we have? Right here, we see that we have a little move, minor correction, another move, right? Very aggressive. Is the market taking liquidity? I don't know if it actually took liquidity or sweep. Let's see if it actually swept those lows, because if it didn't, then we don't have a boss. We don't have a break of a structure. It looks like it did not break. Like it's literally equal lows. So that means this is just another inducement. Okay. All right. Now look at what's happening in the next move. Market creates this high and eventually breaks it right there. Is that a boss? Is that inducement? Let's see. Let's mark it up. Market is very choppy right here. You see like a higher low, little higher, higher low, higher high, right? Is the market taking this one? Yes, it did. Look at this. It's sweeping this right here. It swept at least the closest right there, higher low, right? So it means that this is an inducement. We do have a liquidity taken, inducement, sweep, you want to call it whatever at that point. But to me, it's okay. We do have an inducement. And now this is my confirmed boss. Okay? Because it did take the liquidity. All right? It did took the liquidity from the closest. Now, again, what market does? Price pushes up. It's a little choppy right here. Another impulse, correction, minor impulse right there, pumps and takes off, pretty much breaks. Now, right here, we see a lot of, it's more action. We see more mixed candles, right? So we can literally say that, yeah, market is actually inducing lows. It took this low right there, induced this one. Doesn't matter. It's taking liquidity pretty much everywhere. So we have a couple of inducements right here, right? And then market breaks, right, to the upside. That makes this my confirmed boss. Okay? And so on, guys. Basically, this way you can continue doing your thing. All right? Break of the structure, change of direction, right? In this case, market starts now moving sideways, depending on what time it is. Lots of things can happen. But basically, what I'm trying to show you here is why the inducement happens, what it means. All right. As I mentioned, I do have a lot of videos based on inducement. If you want to continue as part 2, part 3, whatever you want to continue watching here, recommend you watching these videos as well. All right, as a compliment. All right. Just wanted to give you a little couple more examples. All right. And I hope it makes sense. Let me know what you think. And let me know if this is actually helpful for you. If you really like it, give it a big thumbs up. It motivates me to keep posting videos for you guys. I know this actually helps you. So just help me help you. All right. So thanks again, guys, for watching. I'll see you in the next one. Take it easy.